Well, good morning, everyone. Um, it's just me today. Mike Kelly's not coming in the studio. He's not feeling well. I think he had a birthday weekend and he's recovering from it. Actually, I'm just making that up. He's been drinking long enough. He can do anything. Anyway, today, if you don't know already, since 9 a.m. on Friday, the shared appreciation loan program is gone. It's off of the CalHFA website. It's no longer there. It's all the funds have been used, or I should say allotted. There might be in the future some that have fallen through and they'll come back, but we just don't know that yet. I got to say that was pretty fast. We they thought it would go till May, middle of May, and it went to the 6th day of April. So if you count those days, about 10, 11 days, and it was out of money. What are you going to do? A lot of people wanted it. It wasn't a bad program when you really look at the savings per month over the period of time to where you actually still end up ahead. All right. So our current situation today is we're in a locking bias. What that means is if you get in a contract, lock your contract. Don't play around right now. There's too many ways that it could go the opposite way on you right now. So don't play around with it. Today stocks are a little lower. Mortgage bonds, they're all over the place, down some, up some. Right now, they are currently up about basis points, which is really not much about anything. So just don't worry about it. Big news this week. We have the consumer price index for March. It's due on Wednesday. And this, like it says on there, it has a potential to cause a panic in the market. What I mean by that is if it doesn't come in showing that inflation is lower, then that's going to cause a sell off. And if it comes in, right at expectation, it's not going to do anything. And that's what they're worried about, that inflation will not decrease year over year with this number for March. And it's last time that we had this was a couple months ago, and it came in 1/10 higher. And if it does that, it's not enough. They want more than that. We're expecting marginal improvement from it. So what does that mean? Just a little bit. So we're not going to see a lot this time. But the report we're going to see May 10th is where we are thinking that you're going to see a significant reduction in inflation year over year. And that's where we're going to see some rates move at that point. We don't know how much, but that's just what we're thinking. Again, so that's the first report. That's on Wednesday. The next report is on Thursday, which is the producer price index report. And it reflects the inflation in the producer area. And we're going to think we're going to see some recovery on that one. If the first one doesn't come in a little lower or, showing lower or right at this one's going to make up for it, is what we're seeing. So those are the two big reports this week that could move things for us. The other issue is, God, can I say one more time? The housing market is showing some signs of picking up. Really? This week, I should say over the last week, we saw a huge increase amount of contracts written on properties trying to fill in to get, the shared appreciation program. I think we're going to still see some good numbers, but we saw like double the numbers, and that was a lot. Instead of just 20 offers on a property, we had 40, 45 offers on properties. With the shared appreciation program no longer here, I think we're going to just get back to the 15, 20 offers, which is way more than we need anyway, because you can only sell it to one person. So if you look at Zillow's home value index revealing that a 0.9% rise in home prices in March, which that's nationwide. Here in California, it's way higher than that because we never go by the nationwide numbers. Home prices, they're saying year over year is fallen, has up 3%, but the actual have fallen since the peak, which, remember, they're talking about the median price. They're not talking about the actual price of the home. So be careful with that. The median price goes up and down depending on what house prices are sold. Doesn't mean that your $500,000 house is now only worth $450,000, as I keep saying. With inflation and rates expected to decrease further, we can anticipate even more uptick in the housing market. So from here forward, we're going to see more going forward. So just be careful with that. If you're in the market to buy a home or thinking about buying a home, you need to get in the market now. It's going to continue to get worse as we go forward. There's a huge pent up demand from buyers who want to get into homes. And for a while there, we had a kinder and gentler market where the seller was working with you. Well, if you have 20 offers on a property, 15 offers on a property, 10 offers on a property, even 5 offers on a property, they're really not going to really be working with you a lot like they were before. And that's pretty much all I have for today, since we don't have Mike in here to talk about the real estate and do a little bantering. He'll be back on Wednesday. Again, consumer price index on Wednesday, Fed minutes on the same thing in 10-year auction. I think I missed Tuesday is I think I missed that one. Who cares? That is, but the most important things are Wednesday and Thursday, and then Friday is industrial capacity. But really, the big numbers and retail sales. That was the last time we had a retail sales number come in pretty high. It messed with the market also. So all those can really mess with the market this week. That's why we have a locking stance. So just go ahead, get in contract, lock your loan if you're happy with it. All right, make it a great day, and Mike will be back on Wednesday.